Good afternoon.
Good afternoon, sir.
Good. This is an interactive session, so all of you should unmute your mic and time to time I ask questions, right? So then only the class will be useful. Otherwise, it's become useless, right? So yeah, one person try to ask, say something. Try to say something. Who's that? Any questions to ask? Anything? No, right. Yeah, in the last class, we have discussed about the introduction and background of uh, taxation of Sri Lanka, uh, and we have discussed and what are the major two different source of types of tax. So that is income tax, and income tax is one of the most one of the best example in Sri Lanka is income tax and the indirect tax. So VAT and other taxes are indirect tax. As I said earlier to you all, um, income tax is the major area in our syllabus. Therefore, our focus mainly on income tax. Almost 80% of your syllabus will focus on income tax liability of resident individual, not corporations, not companies, not partnership, right? Income tax on individual resident, right? If we have time, we can include other entity too, partnership. If we have time, enough time, we can include in the syllabus uh, resident partnership, right? And yeah, so in this chapter, uh, we will focus on the eight, right, imposition of tax. Identify the statutory provisions applicable to income tax and explain the chargeability of income tax to a person under the Inland Revenue Act, and then explain the chargeability of income tax to a person under the Inland Revenue Act, right? Um, it's both of them, right? Right now we move this section, right? Imposition of income tax. Imposition means uh, we target a person or any entity to make them to pay tax, right? To make them as a taxpayer, right? It is the first section, imposition of income tax. Uh, Subsection of that, statutory provisions. Statutory mean legal provisions, right? Legal provisions applicable to income tax. What are the legal arrangements made in Sri Lanka to collect tax? Then in your degree program, the taxation subject will be taught in two courses. The first, in the third year, first semester, you will study the basics. It's been theory and practice of taxation. And if you go to fourth year, accounting special and advanced taxation, under advanced taxation, you will study the base, not basic, the deep taxation, especially corporate tax, taxation for companies and taxation for partnership and so on. So to take full understanding of taxation, so understanding the basic idea is very important, right? It's a legal provision or statutory provisions applicable to income tax. So Inland Revenue Act, right? The most important thing is Inland Revenue Act. So each and every legal provisions, there should be an act behind that. To establish a company, there is a Companies Act, right? What is the number of that act? Companies Act of Sri Lanka. Companies Act number is what? Companies Act number. Anybody of you? Number 7 of 2007, Companies Act, right? And yeah, the Inland Revenue Act, the main act which is applicable to the imposition of income tax in Sri Lanka in the Inland Revenue Act. The name of that act is Inland Revenue Act. Right? Inland Revenue Act. Right? That is Inland Revenue Act number 24 of 2017 is the act. The Inland Revenue Act has been introduced with effect from 1st of April 2018, right? It was introduced in 2017. Anyhow, it's come to effect to Sri Lanka on 1st of April 2018. Hence, no amendment has yet been introduced. The previous Inland Revenue Act, it was almost 20 years, not yeah, 10 years back. Number 10 of 2006 Inland Revenue Act. It's a previous act, Inland Revenue Act number 10 of 2006. Is not applicable for any year of assessment commencing on or after 1st of April 2018 unless the Inland Revenue Act especially mentioned its application, right? So once the new act introduced, previous act has been vanished, right? Void, no more application on that act. In this regard, Gazette notification number 2064/53 dated on 1st of April 2018 has been issued on transitional provision. Right. So the second one, the Gazette notification. Right. From time to time, the minister or administrators of income tax may issue Gazette notification with regard to the implementation of Inland Revenue Act. Such Gazette notification would also become a part of legal framework of taxation, right? So at the time of introduction of new Inland Revenue Act in Sri Lanka, new act, uh, say for example, uh, the then an employee who is getting salary, monthly salary more than 100,000, he is responsible to pay tax at 10%, right? It is the uh, it is the thing to be, yeah, the thing has mentioned in the act. But later, once a new government come to the power, now new government means the existing government, right? After the presidential election 2019, right? Uh, the new government has changed that provision into 100,000 into 200,000, 250,000. It means an employee who is getting monthly salary is more than 250,000, he is liable to pay tax, right? So these are the new amendments. These new amendments changes notified to the public through Gazette notification, right? And case laws. So legislature, the parliament enact laws in Sri Lanka, Sri Lankan constitution. The parliament is the parliament only has the power to enact laws, right? Establishment of new laws. Whereas interpretation of such law is vested with the judiciary, right? So there are some times ambiguous, doubtfulness on that. So based on the different interpretation on that act, there are a lot of problems will arise. So in that cases, only judgment that in case of different interpretation and conflict of interest, so that case will be moved to the court. Then finally the court and judges will make resolution. So that kind of judgment also considered as source of uh, considered as a statutory provisions, right? um, the legislature, the parliament enact right under the common law, as in English law principles, the decision of higher court become the precedent and are considered example in subsequent matters. Therefore, some of the case on tax matters previously decided based on previous Inland Revenue Act would also become part of the legal framework of tax, right? Some of you are telling that the sound is not clear. So it is out of my control. And the next one is your ruling. Ruling. In order to achieve uniformity on continuous issues in administrating the tax system, tax administrators being the Department of Inland Revenue may issue public ruling as well as a private ruling. A ruling is determination or a method accepted by tax administrators for a particular scenario or an issue. Such a ruling could be useful for revenue officers as well as taxpayer in the future to identify similar issues or scenarios subject to certain restrictions, right? So there are the conflict will be arises between taxpayer and department people, tax authorities. That time they will implement, there are some rules, right? There are guidelines in that department. So in case of any new issues, they will go for that ruling and they will come to the solution, right? And chargeability, charge mean yeah, people say voice is not clear, so we can't understand what you say. So technical problem. What I can do for this? The technical issues, I can't do anything. Right, is it now? Is it okay? Is it clear now? Is it okay? Is it clear now?
Yes, sir.
Okay. Right, chargeability. Right, the officers, Indian Revenue Department officers will collect tax. Right, will collect tax from the general public. So to collect taxes from the general public, so they want some kind of legal provisions, right? Say in the road, right? The road, the motor traffic police are there. So if you are doing any wrong thing, say you are failed to wearing a helmet, or you failed to wear a mask, right? That time the police will stop you and will give you some penalties, charge, right? They will charge. So these charges coming under an act, right? According to the provision of that act. Likewise, to charge income tax, to collect money from a general public, so they want a charging section. So there should be a legal provision. So that's what the chargeability of income tax. Income tax is payable for each year of assessment, right? The important word, the income tax is payable for each year of assessment, right? Each year of assessment by a person. Who should pay tax? A person, right? Income tax is payable for every year of assessment by a person who has a taxable income, not from all income, right? He should pay income tax on taxable income. There are two type of income: taxable income and non-taxable income, right? For that year, or a person who receives a final withholding payment during the year, right? So there are important terminologies. Year of assessment, that year of assessment. Accounting year, how many months? Accounting year, how many months?
12.
12 months, right? 12 months. Starting from which year? Which date?
April 1st.
April 1st. Some companies start from 1st of April, right? Some companies start from 1st of June. Some companies start from 1st of January. It depends on companies, policy, companies, right? But for the income tax purpose, we say, in accounting purpose, we say accounting year, but for tax purpose, we say year of assessment. Year of assessment means the year, 12-month periods, it starts from 1st of April. It is common for all person and all companies and all taxpayer in Sri Lanka, right? Year of assessment by a person. Person mean an individual, right? As a common term, it's an individual, but in tax term, the person has a certain definition, right? We will look into that later in today's lesson. And who has taxable income for the year, so, right? The person should pay tax on taxable income. That's why majority of us are not paying income tax. How many of you are paying income tax to the government? How many of you are? As a student, yeah, students know. How many of you are paying income tax? None of you, no? No one paying income tax among you, isn't it? Am I correct or not? Am I correct or not?
Correct, sir.
Yeah. Not all of us are not paying tax. Who is paying tax? The person who is getting taxable income. So you also getting income, right? Say in terms of Mahapola, your father, your parents give some amount of money, or some you are doing small businesses and you are getting some amount of money. That's income. But on that income, you are not paying tax because these are not taxable income, right? The person, the officers, right? The government officers, the income tax department officers collect tax on taxable income, right, for the year. And or a person who receives final withholding payment during the year. We will discuss in detail what means of final withholding payment. Section 2, right? It's important. Take Section 2 of the Inland Revenue Act. Right? Section 2 of the Inland Revenue Act. In the Act, there are a lot of sections. Among that section, Section 2 is explained the chargeability of income tax. Right? Section 2 of Inland Revenue Act, which is the charging section, we normally called as that Section 2 as a charging section, states that the amount of tax payable in the total of tax payable on taxable income and the tax payable on withholding tax. So this is a section explained about this. The tax payable on taxable income, right? All the time they say taxable income, as well as withholding payments are to be calculated by applying the relevant tax rates, right? There are some rates, relevant tax rates, right? Relevant tax rates. So this tax rate set out in the first schedule. There are a number of schedules in that act. So the first schedule. In the first schedule, they have indicate the what are the rates of tax. Withholding tax credit as well as foreign tax credit can be claimed against the tax payable on the taxable income. Withholding tax mean uh, you already paid tax for certain income. Say for example, if you are deposited money in a bank, in a commercial bank on fixed deposit, say you have deposited 1 million, 1 million you have deposited into the HNB, for example, right? So end of the year you will receive interest from that bank. That interest is taxable income. That interest from the bank is taxable income, right? That's a taxable income. Anyhow, you are not pay tax on this because the bank is already deducted tax from that interest income. So therefore, you no need to pay income tax, right? So it means already tax has been paid to the government, right? In other words, the bank has paid income tax on behalf of you, right? The withholding tax credit as well as foreign tax credit can be claimed against the tax payable on the taxable income. Foreign tax credit means, say you are living in England, right? In England, you are getting income from Sri Lanka as well as in England, right? In England, for England government also you have to pay tax when you are resides in England, right? And also when once you come to Sri Lanka, and you have to pay tax on Sri Lankan government too. So this time a double tax to reduce that kind of double tax. So you can reduce the amount of tax you have paid in England. That's called tax credit, foreign tax credit. However, final withholding payments are not considered as part of taxable income, and therefore no withholding credit is claimable, right? So as I told you earlier, you have deposited money in the bank. Due to that, you are getting interest as income. That income is taxable income. Uh, Taxable income. So for that income, you no need to pay tax, right? And if you already pay tax, you are not included that income as a taxable income again. So I tell lot of things. Most of you are not understand what sir says, right? You will get a clear idea after, and it's been after 4 or 5 weeks, right? So meanwhile, I will show you income tax form, return form, income tax return form. Can you see this? Can you see this form?
Yes, sir.
This is the form. Uh, this is the form
Yes, sir.
distributed by the Department of Inland Revenue to the taxpayer, right? Taxpayer, and they fill this form, right? There are sections, statement of tax calculation. So there are different sources of income: employment income, business income, investment income, and other income. So these four headings normally uh, called as source of income. Source of income means the way of income, right? And there are some deductions, right? Deduction from assessable income. The total of these four sources are called as assessable income, right? Assessable income. From this assessable income, we can deduct some kind of reliefs, right? Reliefs, and then we can deduct reliefs and qualifying payment. We will discuss in detail what do you mean by qualifying payment and what do you mean by relief, right? Then calculation of tax payable, right? Tax payable. So here your total income, and there are some deduction. Government has allowed us to deduct some certain expenses from our income, and finally tax payable. How much on that income, taxable income? We'll get taxable income. On that taxable income, we have to pay tax, right? The tax rate. There are 1, 2, 3, 4 tax rates, right? For tax on terminal benefits, we will discuss what is terminal benefit, and gain on realization of investment assets, balance tax income, withholding tax payment, right? Yeah, refund client, right? So this is the form all taxpayer should fill and return, should send to the Department of Inland Revenue, right? So this is the form, and so there are schedules, right? Schedule of return, individual schedules, employment income, business income, investment income, qualifying payment. So here the given schedule 1, right? Here employment income schedule 1, business income schedule 2. Here schedule 1 is employment income, schedule 2 is a business income. Once you put income, say 100,000, if you put 100,000 here in the page number 10, you have to give a detail of that 100,000, like this here, right? Schedule 1, this is the schedule 1. Schedule 1, employment income, individual, right? Say what type of income, A, B, so who are the boss, who are the owner, who are the employer, that kind of things will be, you have to insert. And schedule 2, income from business, right? Schedule number 3, investment income. If you put money into the bank, or if you purchase shares in any companies, you will get some sort of income, right? Another income, right? So these are the schedules. Qualifying payment, what is mean by qualifying payment? If you give donation to the government, if you give donation to approved charities, right? So that kind of expenditures we can find. Donation to the government, investment made in project of a government development plan. So these are the deductions, approved deductions, right? Here finally withholding payments. So we will discuss in detail everything. I will teach you everything, right? I have confidence to teach, right? At the beginning of these sections, you are you will be confused. So every terms are new terms. Most of the terms are new. So you don't panic. So I will do my best to explain most important things, right? As I told you earlier, the income tax is payable for each year of assessment by a person, right? The person, we will discuss what is the exact meaning of person, right? In normal terms, a person mean what? Normal terms, a people, no? Isn't it? People, yes or no? We say person, people, isn't it? No response from you. No response. Yes, sir. Good. Yeah. But according to the provisions on the Inland Revenue Act numbers 24 of 2017, meaning of person, income tax is payable by a person. It is therefore important to understand the interpretation of the word person in the given act, right? So they have given an interpretation that what do you mean by a person? Person mean An individual. Person mean individual. Or entity. Individual or entity. Entity mean organization, right? Includes a body of persons. Body of persons mean a group of people, group of persons. Corporate or unincorporated. Corporate mean companies are incorporated companies. So there are some clubs, right? Unincorporated. An executor, an NGOs, non-government organization, and charitable institutes, charity, non-profit organization, and charities, right? So a person means an individual. Individual means like you and me, right? Mr. Kamal, Anand, like that. Individual. Entity, an organization, right? People and organization. The organization includes a body of person, group of people, right? Maybe in corporate or incorporate. Some of them are cooperated, registered, some of them are incorporated, unincorporated. NGOs, right? People and organization, simply people and organizations. The word person is defined as an exhaustive definition covering the following, right? Make it simplified, right? An individual, right? Individual and individual people like you and me. Entity mean the entity includes body of person, corporate or incorporate, executor, non-government organization, charitable institution like Vihara, right? Kovil, like that. Charitable institutions. And now let's look at the meaning of year of assessment. Year of assessment in accounting we say as accounting period, right? Accounting period. So that accounting period is differ company to companies, but to make a, to make a common calendar for all companies, the government has introduced a thing, a provision is called year of assessment. All companies should pay on according to this calendar. So the year of assessment is defined as follows. Year of assessment. In accounting, we use accounting period, accounting year, but in tax we use year of assessment. Year of assessment. The year of assessment means the period of 12 months. Period of 12 months, it's common for all, 1 month. Commencing the first day of April. First day of April and ending on the 31st day of March, in the immediately succeeding year, right? The accounting, the year of assessment start on 1st of April. Say example, first if start on 1st of April 2020, the ending date is what? Ending date, if starting date 1st of April 2020, the ending date is what? Ending date of that year of assessment, 31st. Please respond.
31st March 2019.
2021. Good.
2009.
No, I ask the first day is 1st of April 2020. 1st of April 20. Then ending date of that year of assessment,
21.
31st March 2021. Good. Yoga Raja says correct answer. 31st March 2021. Exactly. For example, for instance, year of assessment 2018-19. 2018-19 covers the period from April 1st, 2018 to March 31st, 2019. Here. Note here. 2018-19, right? 18-19. So it says it's mean start from 1st of April 2018 to this date, ending period 31st March 2019, right? 2019. So if I say uh, what do you call, stop, what do you call, how to remove this annotations. Right, clear. Right. And if I say year of assessment 2017, 18, start from which date? 17, 18. Start date and ending date. Please put the date on comment box. Year of assessment. Simply we say YA. YA, year of assessment 17, 18. So what's the starting date? What's the ending date? Good, good. Yeah. So year of assessment YA simply says YA. It says 2017, 18. This means the start date is starting date. Starting date is on 1st April 2017 and ending on 31st March 2018. Right? This is the assessment, right? And also you have to very careful that if anybody give a date, you have to decide whether this date comes on which year of assessment. Say for example, I say one date, 31st May 2019. So this date comes on which year of assessment? 31st May 2019. This date falls on which year of assessment? Please tell your answer on chat box. 1819 is wrong. 1819 is wrong. Yes, 1920. Who says? Shivasankar. Good. Shivasankar says, yeah. And Yogaraja says 1920. Right? Because this date, you have to check on which period this date is fall on. Right? Here, the answer is 1920. 1920. The answer is 1920 because the date start from 1st of April 2000. 1st of April 2019 to 31st March 2020. Right. Right. So these dates come in between these two dates. So therefore, this dates falls in 1920. Right. And 2nd January 2020. So this date falls on which year of assessment? 2nd January 2020. Please tell the answer on chat box. 2nd January. Yes, exactly. 1920. Yeah. Yes. Good. Everybody got the idea. Good. Right? You have to decide. You have to clearly decide on which year of assessment it falls on. And this date For example, 3rd April 2019. This date on which year of assessment? First, 3rd April 2019. It's coming on which year of assessment? 1920. Good, good. Yes. And 12 March 2020. This date, 12 March 2019. On which date? Which year of assessment falls on? '18, '19. Good. Good. Yeah. Everybody says. Yeah. 18, '19. 18, '19. Right. In the questions, they will give you a date. Right. There will be a transaction. Sometimes he may receive salary and bonus. Right. If the transactions falls under your scope year of assessment, then only you have to take into consider. Otherwise, no need to consider. Right. Now we will see the taxable income. Taxable income. The taxable income means the total of assessable income. The important term is here assessable income. Right? Assessable income. So the taxable income means the total of assessable income after deducting qualifying payment and relief. Again, right? Qualifying payment and relief. Qualifying payment and relief for the year of assessment from here employment, business, investment, and other sources. So you get income from only these 4 sources, right? So employment mean you work somewhere else and you get income, a salary. So that's come under the employment income. Business, you are the boss, right? You are the boss. You pay salary to other people, right? So that is business. Investment, right? You are not employment, you are not employee, you are not employer, but you make some investment. You make some investment in the bank, or you have purchased some shares in a company, or you purchased a land and you wait for some period of time to appreciation until appreciation of the price of assets in the land. That time you will generate in profit, right? Investment. And other sources say so any other income coming under the not coming under the employment or business or investment income, right? When computing the assessable income from these sources, here the word is source, right? These sources, the exempt amount and final withholding payments are need to be removed, right? Exempt amount and final withholding tax payment need to be removed. We cannot include that kind of income as a taxable income. So can you say some example? Exempt income. So I can say one example. Many of your brother or parents in abroad, isn't it? Some of your parents or your brother or sister work in abroad, Middle East or somewhere else, overseas. So they have earned income and they have remit that income to our Sri Lankan account. This time, do government deduct any taxes on that income? Income from foreign overseas. Do our Sri Lankan government deduct any taxes on that income? Please respond. If they send you account 1 million, all 1 million will come to your account or not? Yes. MS2 will only respond. Yes. Others, don't you know? And again, our parents doing agriculture, paddy farming, wheat, right? Making wheat in the paddy field, right? And do they pay income tax for that income? Agriculture, the farming, right? No, yeah. Shivasanga says no. Others, yeah. So these are the examples for exempt income, right? Exempt, no need to pay income tax. And senior citizens, the person whose age is more than 59, right? Your grandfather make investment into the bank and they are getting they are getting interest at higher rate. Do they pay income tax? Do the bank deduct income tax on that interest? No. Senior citizen account, no interest, no tax, no tax deducted. And Sisudana interest, Sisudana, no. And income of the president of Sri Lanka, say Gotabaya, His Excellency President Gotabaya Rajapaksa, do they pay income tax for the income? No, they not pay, because these are the examples for exempt income. And also, if you pay a tax on an income, and you no need to pay tax again to that income. Some of you are putting your registration number on chat box, so no need to put. I will collect attendance through Google form, right? I will send you a link. That link will work until 3 o'clock, right? I will give you 10 minutes time to fill that. Then automatically your attendance will be marked. No need to put your attendance, your number on chat box, right? No need to post your registration numbers on chat box. Right here, the taxable income. How do we calculate taxable income? So total of assessable income. Total of assessable income. How do we calculate assessable income? How? How do we calculate assessable income? Here, income from employment income, business income, investment income, and other income. Total of these four sources of income is called assessable income, right? Assessable income. And we deduct the qualifying payments and reliefs. Here, qualifying payments and reliefs. In the schedule here, deductions. Deduction minus, right? Deductions. The relief. There are 1, 2, 3, 4, 5 kind of reliefs. Relief for employment income, relief for foreign service income, relief for rent income, relief for interest income, which means senior citizen only, and personal relief, right? So assessable income minus this relief and qualifying payment. We will discuss the qualifying. What are the qualifying payments? Here, the qualifying payments. So these are the qualifying payments. These are the qualifying payments, right? qualifying payment. Donation to the government, right? Investment made in a project of government development plan, investment in production of film, expenditure on film produced, right? Undeducted balance of investment in purpose of shares, right? So I told several times, don't post your registration number, right? If anybody posts registration number, I will put absent because they didn't listen my lecture. So they are doing another work. They are doing another work, or they are not they are not give the attention on my lecture, right? I will make them absent, right? If anybody posts the registration number on chat box, I will consider them as absentees. Right. I will give attendance link later. Right. Taxable income equal total assessable income minus qualifying payments and reliefs. Right. So basic reliefs and qualifying payments. Right. I think. Yeah. Yeah. Any other questions? If you don't have any questions,